Hello, everyone. Welcome to today's session. We will jump right in here. We'll talk about current market conditions to start out, and then go through and look at a couple of stock ideas. Overall market conditions, we know we're in a bull market, bullish in a bull market, and we've been at the upper end of that range now for the last week or so. Short-term timing signals here, we've got our SPY chart, S&P 500. We're at the upper end of that range in relation to the low point of this range. Just found a really nice support, had a massive run up. We know the drill, right? We're sitting here now. Now the question is, where do we go from here? Obviously, the reward to risk of continued upside within this current trend is low without some type of a consolidation, especially where we're at resistance right here. We also have indicators that are extended. Sentiment is really good right here, which means there's very, very little fear in the market, just a lot of complacency. That's a part of the reason why I don't think we're selling off or rallying, or more importantly, not selling off at least significantly, is because everyone's afraid to sell into this because that rally was so significant. Fed made some changes. That's what the market was waiting on. And so we're just not seeing any indication that that the sellers are anxious to get going here. There are a few things that we want to talk about. Number one, when we talk about market tops, or at least shorter term topping processes, we typically see momentum lead the way, both directions, to the upside and to the downside. In this case, we have momentum, which has peaked and been declining during this downturn, and now we've got breadth, which has peaked at a new high or at a recent high. So sometimes that will create some divergence, enough divergence to see that that momentum is leading, the breadth is lagging, and could get a little bit of a pause right here. That's one of the indications. The other indication is off of buy-sell ratio, which is a great indicator for signaling reversals, or at least signaling locations where trends can start to slow down and start to pause. So the buy-sell ratio, we've seen this width right here. This actually spiked pretty significantly all the way up to a 6, and these areas right here were about 4.5. So we're seeing currently at that range right there, 6 to 1, 6 buys for every 1 sell in the database. So that's really solid breadth, but it's not sustainable, at least within this current trend. So we've had multiple series where we've been long enough here that we've got, typically it's 3 variations of this 3 pattern, of this 3 or 4 pattern. Here we've got kind of this 4, 1, 2, 3, 4 pattern, like a peak area. The length of time here, the length of time, the length of time, the length of time. It's just settling in to be very similar to past patterns where we've reached these areas as well in terms of buy-sell ratio, and that can create opportunities for either profit taking, or tightening stop losses, or just flat out exiting. Losers, things that have just been lagging, they just haven't participated and they're not moving. These are good times to kind of clean house on some of those picks as well, because if they haven't moved yet and the market starts to turn back down, they probably are going to be the first to the downside as well. So when we start to get to these extremes, that portfolio management, that's one of the ways to manage that, is that we are take an opportunity to clean house, look at the ones that are just not performing, get rid of those, free up some cash, free up some capital for any kind of a pullback and opportunities to buy into stocks that are performing, that are leading. And we'll talk about that here in some of the portfolios as well. We also, in addition to that, there are some of the ways that you can look for trading an opposite direction. I'm gonna go into trading view here for just a minute, just because I've got some symbols in here that I want to pull in. SVXY, not that one, UVXY. So UVXY, let's pull that one in here. UVXY. That's the right symbol. It should be, yeah. No, that's not the right symbol. Sorry, let me go to this one. Here we go. SPXS. SPXS. So this is an inverse ETF. Let me pull the volume off. And this is what, when a stock is moving or a market is moving, this is a inverted leveraged ETF. Okay, so what that means is that you have the S&P 500, it's bearish S&P 500 by 3x. So in this case, if S&P 500 is up by let's do it the other way. If it's down by 1%, negative 1%, then this is up by 3%. So it's leveraged and inverse. Okay, this negative 3x basically says that what if it's a bearish fund. It's designed to be bearish if equities are going down. Okay, so obviously S&P 500 has been going up, so this has been going down. So one of the ways to be able to additionally hedge a portfolio, if you don't necessarily want to short stocks or deal with put options or deal with anything that has to do with either excessive risk or leverage or margin, like you might have to do if you're shorting a stock, is you can buy long, you can own it long, an inverse leveraged ETF. There are also inverse ETFs that are not leveraged that'll just match the performance one-to-one in the opposite direction. But in terms of using it for a hedge to a potential downturn, these can work nicely for that strategy. They're not great for, they're great trading instruments. They definitely wouldn't want to buy and hold on to this for any length of time. But in terms of saying markets look extended, we've got buy-sell ratio that is extended. We've also got a few of the sectors that are starting to have some hiccups. We'll talk about that. This is the exact opposite of the S&P 500. So you've got a new support area on this where you have a new high on S&P 500 or equal high. So if S&P 500 drops from here or has any kind of a pullback at all, this is going to increase. So as I say, it's a way to be able to hedge a portfolio. It's if the market drops, this is going to go up, and as it goes up, then at some point, then you just sell it, and then you capitalize on the sell-off, and it brings in some cash on a downturn where you may not necessarily want to completely liquidate all of your positions to ride out a downturn. You can own a larger position in something like this just to hedge any of the long holdings, if that makes sense. So essentially, it's a way to be able to hedge. I don't know that I would use it for anything more than that. You certainly can. A lot of traders like to trade these shorter term, but in terms of saying, I think that the market is going to pull back, at least back to this. Let me see if I can you keep that one. Yeah, let's do this. Let's go here and let's go SPY. So here's the perspective now of SPY. We're at this market top. We had a pretty decent bearish day yesterday, and it just completely shrugged it off, at least as of right now. The remainder of the day is up for grabs, obviously, but it's a really tight consolidation. It's still a really bullish looking pattern in terms of how tight it is. And when I say there just hasn't been really any interest in selling at these levels there, but there certainly could be. There's a range right here, that 448. So if we were to get a high and then a reversal and we were to pull back, and you want to kind of hedge yourself against any kind of a pullback here or even potentially even deeper, then let's go back to that chart of oh shoot, I already lost it, but it was I need to create a new tab. SPSX, that wasn't it either. I don't know why in the world I can't ever remember that symbol. SPXS. Okay, SPXS. here. So now you can see it's definitely, it's definitely in this downtrend, but in terms of a support area and something that will go up if the market goes down, then this is a way to be able to do that. So just an idea there to be able to consider where we are at market tops, and you may not necessarily want to ride out any type of a pullback, or you may consider, it's going to work the same way. You can still place a stop loss on this to say, oh, the market's breaking out, or we know a couple of scenarios. We know that that buy sell ratio doesn't stay this extended for very long. So we know that's going to pull back, but when, okay, and how much. We also know that sentiment, this one actually could go a little bit higher. It could rally back up here if we get another move higher, but it has reached that upper range. So as we start to pull back, I think the bias is still more for a bullish breakout. So we'll see what ends up happening here, but I just wanted to discuss that and bring that to your attention. Let's talk about sectors here as well. And you can find a lot of those ETFs here in the muscle ETFs group because a lot of them will have been moving in and showing up in here. So obviously the leaders of muscle ETFs, you've got blockchain, crypto ETFs here, BITS is the symbol, from 35 to 50. So you're getting Bitcoin, blockchain, crypto that is moving, and this ETF is a way to be able to own that idea without picking out a crypto or owning a crypto or buying a stock, a crypto stock, maybe a mining stock or something like that. This is a way to be able to participate. And then obviously it's had a big run up, but that's been the leader here in this last move. So remember to pull in some of this information off of the leading ETFs. It generates some good ideas. Sometimes you'll find multiple things that are like, oh man, I didn't even consider that idea or think about that idea. There's some good stuff in there as well. And oftentimes the new buy list, you can see what's beginning a new trend. Like for example, gold. We know that gold has had a big run up, but what we're seeing now is we're seeing a pullback into the momentum location on gold itself. Now this is a same thing. It's a leveraged ETF, so it's 2x. So if gold goes up by 1%, this will go up by 2%. So it's a way to be able to leverage that. Some of these are gold miners or gold companies, so you want to do a little bit of research on what they actually are and what they're actually covering. And from there, essentially what you would do is just click on it, go out to Google, and sometimes they'll have information there for that. Sometimes they don't, but here it's going to be able to pull in some of that information, and then you could actually go out to the website. I believe they don't have it on this fund, but sometimes they will have those for different ETFs for the symbol, and you could go out to Direction or to iShare or some of the big names. Let's look at sectors because we're seeing a little bit of a hiccup, a little crack on a few of the sectors. You're getting more and more of these downs in the shorter term across these sectors. So that's what we start to see when markets start to waffle a little bit. We saw all of these green except for energy for a little while. And so now you're seeing of just a pullback in tech. Nothing too significant. If we were help the perspective just a little bit. It didn't, it pulled back. There's bottoming tail bar right here, right at that low point. It's still inside the momentum zone. So tech actually looks really good. We're actually seeing a really big rally today in some of the chip stocks as well. AMD has been moving big today here as well. The 1 year time frame. So we're seeing confirmation, big rallies with AMD and some other tech. That's going to lead tech kind of out of this counter trend. The NASDAQ 100, the QQQ, is also very similar to that pattern. Not exactly, but you can see almost exact. It's pretty close to that. So we've seen a pullback now in tech, enough to pull back to the gap zone right here, where it pulled back to this support, plus all of this back here, and that 236 zone. So it's had enough support that we might see tech continue this overall uptrend. It also could, flounder around right here. I wouldn't mind that. I wouldn't mind another pullback to retest this area, only because I'd like to see even more confirmation for a bounce higher. We've only got one real test. I'd like to see two of those tests. And that would give me even more confirmation of this trend. It just hasn't retraced deep enough, and it may not, but because of the strength of the trend. But if it starts to look something like this and then comes back and then tests, it's going to give us some clues like that here. It may break down on this level, or it may find the support and ultimately start back up again. So good confirmation here on NASDAQ 100. It did dip back up. The short-term trend is back up again. So that's probably going to hold and change today. But let's go back to that. Let's go back to the sector ETF. Energy is the one that is really starting to break down again. IYE is the energy ETF, and that's not oil itself. If we were to go in and look at oil, we get oil off of this. Oil had a real big move yesterday, back down all the way down to here. So it's broken through that buy zone. It was holding pretty tightly inside of this zone right here. And then once it broke down through that, it gapped lower and is now it's got a lot of work to do. It's got resistance here. If it breaks that, it's got resistance here, resistance here, resistance here on each one of those. So think in terms of each of these zones as overhead supply. It's overhead resistance. So I actually think this is good for the market because, you know, the cheaper oil is, it's just an added expense that companies and consumers are not going to have. And that's good. We've talked about that on and off throughout this downtrend, and it's going to approach a real significant base location. All of this choppiness and all of this support and resistance area. So we'll more than likely start to see it holding up, or at least testing this level right here. It's deeply oversold as well. So it's at an area certainly where it could bounce, or within, you know, currently or within the next few days, some kind of at least a counter trend bounce to go back up and test that $67 range. So we're seeing sectors, commodities. Let's look at gold because that's the leading commodity right now in terms of rank. Long uptrend on the 1-year time frame, broken up there. It's inside that momentum zone. 6-month time frame is grabbing this low and this high, bounce right off of this support area here as well. So you're getting buy the dip scenarios, buy the dip mentality on GLD, which is the ETF for gold. So this is also a nice way to own gold without owning gold. You know, gold, to go out and find your local coin shop and buy a bar of gold and something like that. That's kind of fun. You know, I have some gold just sitting in a safe that is like, who knows, you know, gold and cream of chicken soup. And you know, what else do you need during an apocalypse, right? Cream of chicken soup and some gold and you should be set. So but in reality, GLD is an easy way to be able to own gold, pardon me, in a brokerage account, to be able to not have to deal with the actual hard asset itself. Now, gold stock. So this is one of the plays. Remember that the commodities themselves are not, they do nothing. The only thing that controls or moves a commodity is supply and demand. It's not a stock. It's not a company that produces and generates revenue and growth. It can't generate and do anything. It's just a supply demand vehicle. So as supply is increasing, or excuse me, demand is increasing and it's starting to move higher, it's going to push the price higher. Once it reaches a supply zone and the supply is increased and the demand weakens, it's going to start to reverse back down again. So you know, it's a way to be able to trade it and play it and have it as an asset class, but you're not going to get huge performance out of commodities. At least trading them this way. You might be able to if you're trading the futures contracts. That's just an entirely different game. But from here, you can also go in and look at the actual some of the stocks here. You can go to the sectors, go to the sector scan, basic materials, and then come down here and look for gold stocks. I went over this morning just briefly. You've got a couple like Harmony Gold has been the real big leader. And so you're seeing a little bit of a pullback consolidation. The pattern looks similar to gold, but not quite exact. You know, so it could easily pull back. But any of these pullbacks now could be opportunities to add into a gold stock. So, in my opinion, the best way to participate in a gold rally is going to be in either gold stocks or even a gold mining ETF. You can find those that are out there, so you own all of the miners. But you can see a lot of a lot of stocks in uptrends right here. And so, spend some time and look at that. Some of these have really nice pullback momentum patterns. These are the exact type of momentum location we want to find, is we want to find a stock that has already moved this direction. And, again, ideally, it would have been nice to buy back here or even right here. But if you haven't and you're looking for an opportunity to continue with this overall trend, this is still a good location for momentum. Once it starts to pull back, it's back inside of this buy zone. It's finding some support. There's enough pullback and pause and retracement for it to springboard off of that, for it to find new demand. Okay, when it's all the way up to the upside, or maybe it starts to break down a little bit here, and then the retest, that's not ideal. But if it holds like it's holding here 1, 2, 3, 4, 5 days, then it's worth taking a stab at, right? Especially a stock that's in the buy zone. Look at all the green right there. You got annual EPS up 250. You got last quarter EPS up 50. You got sales increasing. You actually have a positive ROE that you don't see that very often on gold stocks. NGD, it's relatively cheap in terms of price. If we let's look at this over the last couple of years and see what it ultimately looks like. So there could be a shot here in the shorter term up to this 170, 180 range, especially if gold continues to move higher. If gold breaks out of the range it's in now and gets up above that 2000 range, it could be off to the races for gold. In fact, let's look at commodities right here and go back to gold. You can see it's ranked. It's the leading ranked stock, leading ranked commodity ETF, I should say. And here's 2 years on gold. So we had this big uptrend, the big downtrend, big rally, nice retracement. So now it's sitting right here. So this resistance is the one I'm talking about. This actually goes back a couple more years this direction as well. And there's a big resistance area from like 2018 that's right at the same area. So you've got a ton of resistance happening right here. That could move things back a little bit. But if we can close up above that, that's why I say I think gold could really accelerate from here. But in the shorter term, I think it's going to chop around here and test those resistance areas. It's still high enough, though, that gold mining stocks are going to be very profitable right here. So you're still going to see groups of stocks that in these gold mining stocks, and I would focus on the top. If you can focus on stocks that have a rank of 80 or higher, and because you've got some stocks that just aren't moving for whatever reason. You've got some of these that are down here. Their ranks, they're probably rallying, but it's probably off of a pretty nasty bottom. Yeah, see, let's go 1 year, there's 6 months. It's starting. In fact, that's actually not too bad of a pattern because it's relatively early. Why I say that is let's actually go back to the signals. Here is this pattern. When you have this pattern where it bottoms, it rallies, and it creates a higher low, and then it breaks out, and then it retests this area. So it's broken out. Now it's retesting that area of support. And if it holds this, that can be that demand area, that demand zone where it starts to rally. And look at those tail bars right there. So you can see 352, anytime it got back to 352, it held that area pretty significantly. So for some bottom fishing, maybe there's some opportunities in there as well. You can see, though, these obviously the companies are run differently and they're managed differently and their mines are in different locations, and there's a lot of variables of why this stock maybe is not participating. But in terms of price pattern, even though it's a little bit lower, that's actually not too bad. Let's look at GLDG, see if there's any others that are kind of like that. 82 cents to a buck, a pullback. Let's see, King Cross. This actually usually is a pretty good stock. It's profitable. That, if you're looking for, sometimes when a commodity is moving and stocks are moving with it, you just get, it's the opposite of the baby going out with the bathwater. It's like all, the tide lifts all boats type of phrase, where whether the company is a piece of crap or not, rising gold is going to is going to have all stocks moving higher. But if you want the best of the best, find something that's actually profitable and making money. This is not in the last quarter, not great. That other one actually wasn't bad. And some of these others, even if they're leading, they may not still have decent numbers. So it doesn't always matter. That's why this price activity is so important. Let's look at this one. Kind of getting distracted here by gold, but these are interesting patterns. This is the pattern that I'm talking about. When you have a rally, it becomes overbought, and then it retraces back into this zone right here, and then you start to see indications of buying. You're going to get, these are bottoming tail bars. You're going to get support here. A lot of times this will it'll match up with resistance or support this direction as well. So a couple compelling stocks there for gold to look at and consider based on this pullback. And I think if the markets pull back and gold continues to do well, these stocks are going to accelerate. So take some time to go through and look, decide which ones maybe fit some criteria that you're considering. And I think that would be really the place to be looking for the next week or so at least. And potentially some of those tech names as they rally and as they find some support, there may be some opportunity there as well. Let's jump over to just some of the muscle stock group. Now, just as a reminder, the muscle stock group, these are just such great stocks. So you can add as many or as little as you want. One of the ways that I manage these is, where am I? Portfolio. This muscle stocks portfolio is, and I just added a new one in here. Oftentimes I'll hold more positions, but it just depends. Kind of depends on what I feel like market conditions are at. I had up to 11 holdings in this and have sold off some of those, but you're seeing some of the gains, and I haven't had these for very long. Most of the uptrend, just this and AAOI, this is one to definitely keep your eye on because it's had a breakout. It had the buy signal here. I think I got in on one of these pullbacks or one of these days right here as it started to move back up again. We had a huge rally here. It retraced. Now we got another huge rally and some potential support right here. So keep an eye on those muscle stocks group, that list, because if it pulls back into the buy zone, even though there's no sell or there's even no hold, it's still green, still in that green uptrend, but you get a pullback into the buy zone, then consider those as well, because these are your high octane stocks. These are the ones that, these are the ones that move the most, because not only my scanner, but you're getting everybody's scanners that are pulling it in these stocks. And so there's just a ton of eyeballs on them, which is what we want. We want a lot of eyeballs on these stocks to be able to, more eyeballs means more volume and more demand for that. And if it's moving this direction, you can get lots of activity on those. CBay, this has also been, a nice one to have. And this is a perfect example of how I would want to participate in a stock. And that is, it's either a new buy here, okay, or a new buy here. If it's a relatively new trend, it retraced out of a sell signal. Now we're playing again here. We're playing again here. And it's okay that we didn't buy here, and it's okay that we didn't buy here, and it's okay that we didn't buy here. We don't have to buy at the exact low because it's very hard to do, and it doesn't matter. It just doesn't matter, because what we want is a methodology that adds some consistency, and it adds a methodology that we know what we're looking for each time. So in this case, it's a muscle stock. In fact, I like to do this where we'll slide back. Let's slide the slider bar back a little bit and say, what would we have done game, okay? And so let's look at this bar right here. So here we are. We've got a swing high and a swing low. It's grabbed it. Market conditions are good. We know that. And again, I'm talking about as of this date, which is October the 30th. So the market conditions, actually, if you remember from the buy sell ratio, they were actually pretty extended. This actually was almost the exact bottom. Let's look at that, because you had buy sell ratio on October 30th was right here. Okay, so October 30th was right here, and it started to curl back a little bit. So we had some early indication that something was up, something was happening, and then you have a strong stock. You have a stock, oops, it didn't hold on to that. Let me slide that back a little bit. So now you've got a stock that already started to move, and then you get a confirmation bar right there. Market's finding support. Stock was on this day, it was still the rank. If you look over here on this side, as I'm mousing over that, it might be hard to see, but it was a 100 rank. So it was already a leader because it had had this big run up already. I'm going to actually just slide this back up. Sometimes it'll do that if it'll pull in some cached data, but let me do this and let's do this. And on the 1 year chart, it retraced a little bit deeper right here, and that's okay. That's a healthy counter trend correction. But now this is the location. I'm going to go in, I'm going to buy that. I might place a stop loss to begin with, maybe below that low point. I may set it even deeper. Depending on the scenario, I need to make sure I'm managing the number of shares. If my stop is wider, I'm taking less of a position. If my stop is tighter, I'm taking more of a position. Okay, so either way, I can still manage my risk according to the stop location and the position size. I've talked about that before. Those are the only two things we can control. We can control when we buy, we can control how much we buy, which is referred to as position size, how big of a position or how many shares am I buying, and then we can control our stop loss, which is our line in the sand, and that is, okay, at what point am I going to call it quits? At what point have I lost enough on a trade to say, bag it, I'm done, I'm out, I'm calling it good, and I'm moving on? Okay, because we have to have that. We never know the scenario of the stock. It could, something could happen and it could slide all the way back to 7. We don't want to play that game. We don't want to play the risk game, and especially the over risk game. We want to play the momentum game and manage our losses so that we're out quickly. And when we're in a winner, it turns into that. It rallies, it retraces, and it's gone up from there. So just that little trend from that move alone on this overall uptrend is 32%. AYs haven't had a big nice run. So don't forget about those stocks. In fact, I would look at those every single day of what's in here. And a quick way to scan through those is just pull in the scan, pardon me, and let's keep it at the 1 year time frame. You can see, man, this thing is just continuing to run. But then you just select your scan and then arrow over, and it's going to show you that stock. So same story right here. Pull back. What was the rank on back here? The rank was still 99, and the reason why was because it had had a big move in the last 12 months. Rank considers a stock over the last 12 months, so you can have a decent pullback, and it can still be considered a highly ranked stock because it's looking at this amount of time. It's not so much focused on this last little move, although it is. The rank is 40% based on the last quarter, so it does play a part. But this had such a huge move from 2 to 4 and then pull back, and then from 4 it's just gone hog wild here. So let's actually go to the next one and see, because what I'm looking for is I don't want to see this. I still could, and that's okay if the pattern is starting to present itself like this one is. It's not a bad pattern, pretty volatile stock. Biomed, I may be like, I'm going to pass on that one and move on to the next one. This was probably a buyout or something like that. I haven't looked. Those will show up in the system until the new symbol takes over. This was not a buyout. This was an FDA type of approval of some kind. It had a massive gap, pulled back, and then we had this bar right here. In fact, I own this one in the new buy daily portfolio. Let's see where it's at, because I'm pretty sure I pulled it in right here. And the new buy daily, what was the symbol? It was S. Got some decent winners working in here now. SLNO, so 40% on that just from this move right here, from 22 higher. Okay, so and that's simply it had gone from a hold to a buy. The new buy was on this day. I'm buying whatever the new buy is for that day in this portfolio. It creates a lot of stocks, but so be it, right? It's what I do. So we might as well be able to look at some of these and test them and see, knowing that we're going to get some big moves on some of those. Actually, let me go back to muscle stocks because I wanted to keep scrolling. So obviously, this is one that's like, I missed the move, but was there an opportunity back here even without the downtrend? What I'm looking for is momentum over here. Momentum that's anything less than 140 is in the buy zone. 140 or higher is in that extreme zone. So right here, you've got momentum at 138, 140. It starts to bump up right here from that rally, and then it really takes off. The reason it's taking off is because of the breakout. Look how powerful a breakout can be. Okay, once it closes, and this closed above this area where it has been before, and now you just have fresh buying. There's nobody that has bought this high before, so it's all just fresh buyers jumping in. Nobody's saying, when we get back to these areas, you get people that either bought here and now they're selling, or you get short people that are shorting to jump in. So the breakout is really solid momentum confirmation pattern here as well. Let's move to a couple others here. If there's anything interesting. Again, another biomedical that had a massive gap. I don't love those. CVNA, this was the one I just added because I like this into the muscle stocks portfolio because I like this move here, the gap on the open, and then a retracement back to support right here. So it's moving back. There's a question here regarding that. Let me read that, Dave. I've heard that a stock must retrace to fill a gap. Is that a good generalization? Yes and no. I mean, the theory is that a stock will always fill the gap, but what the theory does not tell you is when, right? And typically what happens, the reason why it fills a gap, let's talk about this gap, is because that's where support is. The location where the support was at is the more important part of it versus the gap. Like this could fill this gap here, but it's only working its way back to support. It's not necessarily trying to fill this void, but what it is doing is it's retracing enough that it's going to find support right here and it's going to bounce. So I wouldn't get hung up on that. I wouldn't get hung up on too many things because it's like, yeah, there's a million things that everyone says, it's got to fill this, it's got to do that, it's got to have this, it's got to retrace this or do that. And it's like, well, that's why everyone has a system, right? Everybody's got their own model and their own method because you ultimately do what works for you and where you find your comfort zone and what you find to be consistent. But just remember, the stock market is three things. It's nothing more than three things. Number one, it is a representation, a stock price is a representation of the present value of the future earnings of this company, Carvana. If that company is making money and profitable, the stock is going to increase. If it is losing money and it is dropping and the company is crap, the stock is crap and it's going to drop. So ultimately, that's all there is it is the present value of the future earnings of the company. Now, the other two things that are with that are support and resistance, or supply and demand, because the market is a real-time price discovery mechanism. What it is doing in real time is it is saying everybody's now starting to anticipate, well, what the heck is Carvana doing? Are they making money? Are they building more stuff? Are they all we can do now and all the market can do is guess, is conjecture, to be like, wow, they had a good earnings report, they're probably figuring things out. And that's why you've got all these firms that they're looking at the balance sheets, the income statements, and they're flying drones over parking lots to see if anybody's shopping at Target and different things like that. So there's lots of different variations to look for. Why do we think the company is going to improve? And that is a market. That is me with my decision, you with your decision, Fred with his decision, Joey with his decision, Bernanke with his, like, everybody's got a reason why they think it's going to move higher or lower. And that's what creates this. That's what creates the volatility, is everyone is trying to figure out what the company is doing before they report anything. So you get trends, you get support resistance. So then we're dealing with human beings making decisions, and we can look for, it's rallied, it's pulled back, there's a support zone right here. That's a high probability buy location. So support. Okay, and each of these lines represents support and resistance areas. So the trend is moving higher, it's breaking through those support resistance. So those are really your main things to be looking for. What's the overall trend direction, and is it maintaining that trend direction, and is there support in that overall direction? A couple other questions in here, and then we'll finish up. Question in here, will the trade expectancy in the back test help select these winners, or another feature in the back test? Yes, let's talk about that. So a back test. So a back test within our system, a back test, all it does is it tells you the characteristics of the stock within the system. So if I were to back test this stock over the last year, and I were to say, okay, over the last year, Carvana has had three signals. Okay, one is currently open, and each of those signals, at least within the last year, has been, one was profitable, one was not, one is currently profitable. I could now go back a little bit further in time. Actually, let's see, let's go the state range. Let's go back 2 years and say, okay, over the last 2 years, this stock has had 7 trades, 4 winners, 3 losers, so an average winning percent of 57%. But the average gain here is 180% with a trade expectancy of 40. What the trade expectancy does, and a drawdown of 25. So really, I want to look on a back test. I want to look at the characteristics of the stock. It's not going to, obviously, it's not going to tell me what the future is going to be, but what it is going to tell me is what could I expect? What kind of volatility can I expect out of a trade? Okay, I could expect probably a 20% loss if I'm wrong from a buy signal. But on the upside, I can expect, some decent returns. This one was maybe an outlier, it was huge, but I can now say, okay, I'm dealing with approximately about a 25% drawdown if I hold all the way to the hold signal. Okay, and so I could go in now with this new buy signal. I can back test it. I can go in and say this stock has a pretty good, profile in terms of its risk characteristics, its volatility, how it trades inside the overall system. So, and I can also say how long might I be in this trade? The average days in the trade is 47. The average days between trades is 54. So if I buy and I get a sell signal and I get stopped out, or I sell at that sell signal, I'm going to probably end up waiting 50 days before I get a new signal, a new buy signal. At least within the last 2 years, that has been the characteristics of the stock. So yes, absolutely, you can, you really can. Back tests are just that. It's no different than looking backwards at the price. I can do the same thing. It doesn't tell me what it's going to do in the future, but it tells me the characteristics of a stock. If I saw a stock that had the largest drawdown was 60%, I'm like, no, I don't want that potential risk. And so it may create a reason for me to drop out of a trade like that. In fact, let's look at now, because this one is going to be skewed a little bit as well, because you end up with some massive winners. But I could look and I could say, sometimes too, you get a stock that's got a new product or a new technology or a new idea, and it hasn't been discovered back here, but now it has been, and now it may be going forward. And so the characteristics of the back test going all the way back and including this may not provide as much value, and it may not provide as much value, but you can go back and look and see. If we were to pull a back test on that entire time frame, see if it pulls in this entire time frame here, 2022, it does. So this particular stock, you had in that time frame, you had 5 trades, you had the average winner was 100%, the average loser, and there was only one of them, was 18%. So same story right here is, you're dealing with about, and most stocks in this system are about 15 to 20% losses on a signal. Some are a little tighter than that, some are a little bit more than that, but this actually, so I could say, man, this thing has some really nice qualities to it. I'm going to wait for this next buy signal, and when it, because this is what I'm looking at, and once I get to that point, then I'm jumping back into this thing, and sure enough, it pays off within this overall uptrend. It is. That's a great question, Douglas, because it does definitely help in the analysis. What it helps is it's really just another filter to be able to do that. Now you can filter through that. If the list is too big, you can do a back test all. It becomes a little too much for this back test all function. Sometimes it freezes. I'm actually working on that to improve the back test all. But if I'm looking, I don't necessarily have to back test them all because I want to be able to maybe pick the top 2 or 3 or 4. So I also might have a screen that I've got, and it's like inside of that screen, I've got a list of, you know, 555s. That's even a little bit too much. Let's go up. Let's go with these. So here, that's probably not enough, but now I could back test these and it'll back test both of those stocks. And then I can say, okay, this one obviously didn't perform as well, at least within that time frame. It's not a very long time frame. Let's go back 2 years and see how these 2 stocks have done just within this overall time frame here. Same story. This one just hasn't worked very well. And if we were to look at a chart on it over the last 2 years, this is the issue. It's just too volatile. The momentum part of it, you know, it's not bad, but if it were to, you know, the sell-offs have been really sharp and fast. So you get this uptrend and then it immediately reverses back down again. Those are characteristics in a stock that I don't want to participate in. I don't want to include that in my analysis because this probably is the characteristic of the stock. And what is the characteristic of the stock? It's the characteristic of the traders trading that stock. Firms trade specific stocks, and traders of those firms, they may trade 1 or 2 or 3 stocks, and that's it. So you get characteristics that'll happen in some of those stocks. So I could go back to this and say, okay, of those 2, I'm at least going to rule that one out. This one's not as bad, but let's see, you do still have some volatility here. We can now back test just this one and go back and say, okay, based on this 57% win rate. Now the trade expectancy includes both winners and losers. Okay, the annual trade expectancy is here, but the trade expectancy is saying of winners and losers, your overall annual expectancy is about 5% a year over that time frame. Okay, and that part of that is because it's including this of just the winners. So yes, it really is a cool way to be able to get a little bit deeper dive into a stock's characteristics. And some of these muscle stocks, if they've gone to sell or if they've gone back to hold, I think all of these are only included. You can create a screen that's just got, I think I actually got rid of mine. You can add a screen that is, for example, 95. Let's see if I've got another one here. Lost my train of thought. Oh, here we go. 95 to 100, not extreme. I knew I had one in there. So what this is pulling in any ranked stocks that are above 90 and that are not extreme. Okay, so I can then go through this list and I can say that looks extreme, but it's not extreme in relation to where it is here. It's not in this upper zone. So it allows me a way to sort through muscle stocks that are a little bit better set up than some of those ones we just looked at that were all extreme. They'd already had the move going higher. And this can be, you know, stock like this is a great example. For whatever reason, this thing's gone from 3 to 12. How much higher can it go? It's probably getting a little bit tired, but you can see that's starting to happen. It's starting to pull back inside of that range right here. Interesting pattern. So that's one of the ways to really fine tune the method, is to say, I want more. I want to find stocks that have this rank and this price and this whatever, and it's not extreme. Royal Caribbean has been moving really nicely off of this low right here. So lots of functionality, and that was a great discussion on that back test tool, because we don't get too many questions on that But it's, again, just remember, it's a way to, it can be a filtering process of, it adds probability to your trades because you're looking at how it performs within the system historically. And that's important. That can be important to say, if it has been doing this, it's got a high probability that it will continue to react that way within the overall signal. So I'm going to end on that note. I sure appreciate everyone's time and effort, and we will see you next week. Have a great weekend. Bye now.